Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bearish dark cloud cover pattern yesterday after the previous session's bullish engulfing pattern. It was still nevertheless the second close over the 50% Fibonacci line of the January 2021 to September 22 move at 109.44, though not by much. This 50% Fibonacci line had previously capped the market on a closing basis since late last week. Overall, we are still within the March to date bull channel. That's currently 106.69 to 111.41. And it's highlighted in bright red on my daily chart. Below the market, we have the flatlining short medium moving average, currently 108.83, and the flatlining medium moving average, currently 1809. Whilst above, well, we are still within the congestion from late April to early May from the 50% Fibonacci line up to the interesting and influential neckline of the July 2017 to November 2018 move, currently at 110.89. It's highlighted in dark blue on my daily chart. This neckline capped the late April and May highs and allowed the construction of the mid-March to date bull channel in the first place. Now, so far today, a really interesting move below the 50% Fibonacci line and the short medium moving average now, and possibly started to look at the medium moving average below that. Cable, aka sterling against the US dollar. Another indecisive pattern yesterday, this time an indecisive spinning top. I'm beginning to suspect that the overhead congestion combination made up from the November 2020 low at 128.52, plus the upper bull channel line currently at 128.68, and the powerful looking July 21 today optimized downtrend that you can see angling down in dark blue on my daily chart, currently at 129.01. All these are trying to cap the rise made since the end of May. Hence the indecisive patterns. These three resistances reach their narrowest and most powerful points in the middle to end of next week. So, if there is to be an attempt higher, then it would seem better to do so very, very soon or after next week, because of the combination of the forces overhead will soon reach their zenith. Meanwhile, below we have the interesting 50% Fibonacci line of the June 2016 to September 2022 move at 126.99, plus just underneath that we have the September 2020 low at 126.72. These original resistances that have now turned into supports had capped the market back in early to mid-May, so they appear significant. So far today, well, a small diff blower to test the 50% Fibonacci line, but seemingly recoiling back up away right now. Euro sterling. A higher but still indecisive spinning top yesterday for long tongue on it. It was in part, I suppose, a follow-on higher to the previous session's very interesting and quite large and unusual key reversal up. However, it was not a solid follow-through. It nevertheless still supports the idea of a possible weekly key reversal for this week. So, if we close tonight either over 85.45 or under 85.30, then we'll be on. Right now we are still looking at a possible weekly key reversal up. The action may also have further significance. You see, in the past 2 and a bit weeks of approaching and testing the significant November last year low at 85.45, the market had yesterday seemingly finally given up on the move lower. This indecisive spinning top means that the search lower may not be over. Meanwhile, looking above for a moment, we have the April 2020 low at 86.69 and the April 2021 high at 87.19. And in between, an area of congestion that we saw being built up as a rectangle pattern and halfway hesitation back in May. And so far today, a lower open, well, a move lower, testing the support at 85.45, significant move lower, and the last 3 days are looking like a possible 3-day bearish evening star pattern in the making right now. And also, we are testing whether we will go to an outside week for this week rather than a weekly key reversal up. US dollar against the Indian rupee. An indecisive spinning top yesterday. I'm starting to have a suspicion that the market may be looking to build up congestion area around where we are now, roughly between about 81.90 to 82 even. We've had a lot of closes around this area and a few highs and lows over the last week and a bit. so I think there may be something to this idea. In the meantime, we have overhead the rising long moving average, currently 82.12, then the flatlining short medium moving average, currently 82.17, and above that, the slowly dipping medium moving average, currently 82.26. Looking below, we have an early May piece of closing base congestion between approximately 81.65 to 81.80. Overall, this seems to now be a hesitation period we're going through after the pullback from testing the overhead broken since seemingly repaired upper time, currently 82.5, and that's of the October 2022 to January 2023 mildly bearish shift pitchfork, which is highlighted in dark green on my daily chart. Separate to all this, the main recent feature here remains the recent bow tie formation of the short moving average, currently 82.22, short medium moving average and the medium moving averages. This triple crossover pattern sets up the opportunity for a move higher as the moving averages went in and out of the bow tie in the right order and were mainly pointing higher. The theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, we are right in it today, as it's between the 20th to the 27th of June. So look out for any potential moves, though so far it has been disappointing. We also have, though I'm perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue on my daily chart. The market continues to have difficulty interpreting this pattern. So far today, a significant lower open, though still within the 81.90 to 82 even range, if only just, but then a straight move higher up towards the long moving average and looking right now like a combined bullish engulfing pattern and bullish opening white Mariposa. US dollar against the Brazilian real. A new low yesterday, one not seen since June 2022, but to sow some doubt into the move, it was also an indecisive spinning top. It was nevertheless a second consecutive close below the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54, and a further move below the breached lower bear channel line, currently at 481.65, and that's highlighted in bright red on my daily chart, and that's the November 22 to date bear channel. This breached trend line had acted as a cap on the market in one way or another for just over a week now. Much more of this behavior, and I'll become obliged to highlight the bear channel that I've highlighted there. Below the market, we now have support at the lesser Fibonacci line at 472.92 and the May 22 low at 468.98 before we see the lower time, currently 462.84, highlighted in dark blue, of the broken but seemingly repaired late July to late September 2022 bearish shift pitchfork. Now, this pitchfork is important as it showed the bearish angle of attack way before the bear channel was created. I'll continue to watch the action around the bear channel with interest. Sitting over all of this is still the shadow of the monthly key reversal down we saw in January here. US dollar against the Mexican peso. An immediate countering bullish thrusting pattern here and bullish opening white Mariposa yesterday after the previous session's bearish army, if only just then. The market overcame its discomfort and moved back up into the original breached September 22 to date lower bear channel line, currently at 17.1290. What I suspect may have caused the move back up is the mess of supports below, made up from the core band of support, which is between approximately 17.0390 down to 17.0135, which has as its constituents the April 2016 low at 17.0389. Additionally, just below that, we have the middle time, currently at 16.9578 of the December 22 to March 23 bearish Andrews pitchfork, which is highlighted in bright red on my daily chart. This middle time had supplemented at a sharper bearish angle of attack, the breached bear channel. We also have in dark green a March to date descending wedge pattern, currently at 16.9316 to 17.4288. The lower trend line for this is just below the middle time. What all this does is show that this market is getting squeezed tighter and tighter between supports and resistances. And I have a strong suspicion that something's going to give way and it's not that too distant for future. So far today, a higher open and a seemingly cohesive move higher out of the congestion area below and towards the upper trend line in dark green of the descending wedge pattern.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.